Good evening, folks. This is Raghu here. Today, I wanted to walk you through Camarilla pivots. Now, many of the folks don't know what are Camarilla pivots, but just an introduction. But whatever method I'll be teaching, they are the methods which most of the professional traders use with price action. What is the difference between Camarilla pivots and floor pivots? Both work on a formula. So you can Google out the equation formula for both floor pivots and Camarilla pivots. These capture the price action of the market. Like most of the folks, when I search YouTube or go through the books, uh, they don't explain clearly why we need to use pivots. Yes, pivots is a leading indicator. You get some kind of direction when price is moving, where exactly the direction might be going. Beyond this, why they work the way it is supposed to work. I mean, most of the times when you start using pivots or Camarilla pivots, you will be surprised. They work very accurately. It's like a magic. They are like magic lines. The reason is that majority of the traders use these pivots. That is one a general consensus among top traders that is the reason why they work. Like I'm watching price coming from R3 Camarilla pivot, and I know the direction is S3. Fair enough. But beyond this, you need to understand why this line is here. Why this line is here as per the equation. Now, when you plot, let me show you here. Watch the screen. Okay, this is pivots. Earlier, I had made a video of Nifty post-market analysis using pivots. If I put Camarilla pivots here, what did I say earlier? This is the important trading decision made by sellers on Thursday in a pullback to take the price down. Now this region is very closer to Camarilla pivot. And if you watch these lines capture the important decision making from the previous market as well. Similar to pivots. Now basically what I'm trying to tell you here is these pivots work because they are purely based on price action formula or equation, and it captures most of the important turning points in the market. And these turning points are very important. And if you uh, want to learn more on this, we can continue our efforts in introducing you to pivots and pivots methodology. Now this video is again an analysis of price movement in the market, and it is applicable to all the markets. And also I would like to introduce you to Camarilla pivots and explain you what each pivots are. Now you might have seen, if you use Camarilla pivots, most of the folks or most of the brokers have a central pivot. So I'm not using central pivot because Camarilla pivots does not have a central pivot similar to CPR. If you see, you have a CPR and then R1, R2, S1, S2. And why do you see I'm using R3, S3? Where did R1, R2 go? Where did S1, S2 go? These are some of the questions you might have. You have it here, S1, S2, R1, R2. If you put it, you got it. Now see how close these pivots are. Can you trade using these pivots, R1, R2, S1, S2? Not that they're not important, but while trading Camarilla pivots, we have figured out, we means the professional traders who are trading before me or before I was born, they have identified that since these pivots are very close by, they would ignore S1, S2, R1, R2. There's a reason for that. I'll tell you. Now, the way I use is I use both Camarilla pivots and the floor pivots in combination. Before explaining that, I'll give you the basic introduction. Camarilla pivots means Camarilla is a Spanish name, if I'm not wrong, and there is some mysticism or secret surrounding this pivot. So in theory, nobody knows what is the true formula for Camarilla equation. If you search the web, people mention that we have the accurate Camarilla formula. It's kind of some underworld people searching this Camarilla pivots formula to trade in stock market, etc., etc. But based on back testing, most of the traders have come to a consensus that this is the specific Camarilla equation, and whatever I'm using, it is available in TradingView, it is available in Zerodha, it is available in most of the brokers in stock market. You can use it, and all of them are using the same formula for Camarilla. So if you want the formula, you can Google it out. Now, what I am using is the right way of using the Camarilla pivots. This is how I have learned. Similar to pivots, the Camarilla pivots also act as support and resistance, buying and selling, or support and resistance. When you call it support and resistance, this is where most of the traders go wrong using Camarilla pivots. Now, these are little, both the pivots and Camarilla pivots, they are not mere support and resistance, they are the decision-making points. Now, Frank Ochoa in his Secret of Pivot Boss made these pivots very, very famous. Now, these were obviously introduced by some other authors, and a lot of other authors and successful traders have used it. But I came across these pivots using, reading the book Secret of Pivot Boss by Frank Ochoa, and I recommend everybody to read this. Now, when you read this, you would simply understand this as decision points. So why I'm calling decision points is here it is. When it comes to Camarilla pivot, R3 is a upper resistance. R4 is a upper resistance. Then you have R5 or H5. They call it as R3, H3, R4 or high 4, resistance 4 or high 4, L3 or S3. Don't worry about these nomenclatures, but just simply understand that there is a difference. The difference is, if it is below R3, it is a selling point. Understand, it is a seller's area. You need to just memorize this so that you can just visualize direction in only one way without confusion. If you come to R3, below R3 is a selling region. What is S3? S3 is a buying area. When it comes to S3, buying area. Now these dots are previous day high, previous day low. They are also very important pivots, so I always use them on all my pivots. This is monthly high and monthly low, color coding. This is monthly low. This yellow is weekly low. All right, they're important pivots, so don't get confused why I have these different colored lines other than Camarilla. So this setup works really good for me. I'm sharing it with you. What is R3 again? Selling area. S3, buying area. R4, next resistance, selling area. S4, selling area. R4 breakout. R4 breakout means it's a breakout. Market has broken out of the trend. It's a bullish trend. S4 breakout, it's a selling area. Bearish trend. Understand? R4, above R4 breakout, it's a bullish trend. Below S4, it's a bearish trend. The last level of resistance is H5. Even if it breaks H5, bullish trend. Below L5, it's again bearish trend. Now here, when it comes here, you will watch whether the price reacts here. If it is the last point, obviously price might react here, try to take support. But catch here is your breakout trend will be S4 and R4. I'll show you. So all right, see here. So this is the scanner Camarilla H4 L4 breakout. Before I go any further, I just want to show you this. Okay, this is today's. Today was a bearish trend, but Muthoot Finance has crossed 2.26%. It says H4 breakout. Let's see, where is Muthoot Finance? Do you see? R4, H4, R4, H5, or R5. What happened, market? Boom, breakout. Now the catch here is in price action, you have to understand from where price is moving. Again, similar to the previous video, the uptrend was, this is following Nifty, 225 exactly, Nifty started moving. So this also started moving. What do you see this morning? Okay, R3 is a resistance. Price is opening below R3 and the previous day high, it started facing resistance because previous day high is a selling zone. But after that, once R3 is broken, you know that after this doji, who has made the decision to take the price up? Buyers. So if you understand real price action, when you see a doji and such a big green candle, you would enter near the previous day high above, keeping the stop loss at this midpoint, or if you're a courageous person, you will keep it below R3. See how beautifully market moved? Then it came down, so it's showing 2.3%. But if you just go here, what would be your long? Okay, assume you're entering here, previous day high, keeping stop loss few points below R4, sorry, R3. And if you just go, this is 1:6. If you go to the high, it is 1:7 is a risk to reward. As a professional trader, what do you look? You will look only for 1:2. I mean, it depends. But what most of the people follow. If you get 1:2, you have made your money, close your trade. They go with large order, make 1:2, close their trade and go for enjoy their day. We'll go for next one. Close this one, right? Yeah, housing development. Okay, HDFC. What do you see? It started from H3, R3, R4 breakout, boom. It's a breakout. So what I'm trying to tell you here is these two are the example how Camarilla pivots work. Now here R3 about Nifty. How do you read? It's a very similar to how I read all the price action. Okay, let's say for example, we'll remove everything. Okay, how are you going to trade naked charts? What are the resistance? You know, this is a resistance. This is a resistance. This is a resistance, right? Let's draw. This is a resistance. So just because you know pivots are magic line. If you blindly follow that, you will get slaughtered in the market. Okay, this is today's resistance. This is one pullback. I'll tell you how to mark support and resistance in some other video, but just marking you. I mean, this is the most commonest thing. I'm marking the latest from here. These are the resistance. I know Wycraft support and demand says or communicates with market in a different way. I can simplify that as well, but support, resistance, pivots, Camarilla pivots, Fibonacci, supply and demand. When you see these different flavors, you will feel like, okay, you are tasting different ice creams. Maybe the people who has found out, they might have seen market in different way, because there are no one particular way of reading the market. We are all human beings. We read markets in a different way. But the catch here is, who is participating in the markets? It is buyers, sellers. You can call them bulls, you can call them bears, you can call whatever name you want. You want to call them retailers, you want to call them smart money, you want to call them big institutions, you want to call a common man trading here. Whatever you call, when you just simplify the entire market, there is a buyer, there is a seller. Now, it is very important for you guys to understand this so that you come out of your fear. Most of the times, as a trader, when I started my journey, a lot of people used to say, what if I get caught? Oh, somebody is fooling people. He's increasing the price. See, now price will fall. He's caught. bulls are trapped, bears are trapped. My advice, do not get into these kind of bullshit things. I'm sincerely advising it. If you are a news trader, be a news trader. If you are afraid of getting trapped, do not trade. Safeguard your money. Just run away from the market. If you are a proper trader who wants to trade using technical analysis, just watch if there are any events on that particular day. If there is a big event, some stock news is coming up, maybe their board meeting is going on, or RBI meeting is there, quarterly reports are coming. Now these days, emotions will be very high. Any trader, like I said, oh, somebody will make me trap here, or somebody is just moving the price up. Now these people, whoever is talking, they don't understand the market. As said, in a simple way, whether it's a big institution or a retailer or a common person, there have to be only two people. Either he's a buyer or he's a seller. If you understand this, you will come out of your fear, and whatever trade you go, every trade is a risk. You need to keep a risk amount for my 1 rupee risk, how much money I want to earn. And are you taking the risk in the right location? Is it a high probability trade? These are the questions you should be asking, rather than following some bullshit person who wants to create fear. Now watch this. This is a selling area for me. Why is a selling area? Because sellers decided to take the price down. I again explained here, bulls try to stop the price here, kind of pull back sideways, not convincing. This is a selling area, decision making area. You see a green candle and a big red candle. You can also follow up pin bars, gravestone doji, morning star, evening star. I mean, whatever it is there. If you watch my video, as per the experts, I have simplified only with 4 important candlestick pattern, which explains the price action. Now here, prices went down. Why it went down? Watch this area. Who is making a decision here? This acted as a support. Once the support was broken, support has to act as a resistance, right? So next day, the same area here and there. These are not Lakshman Rekhas. Always I call it as areas, because around that area, you have to be watchful. It gave a breakout, then breakdown. You have evidence 1, evidence 2. Okay, this is a previous support broken down. Oh yeah, what is the day context? Market has from open, it is coming down. So you have a context, you have a high probability area where you can take short here. Now, when you mark this area, a range, day 1, day 2, day 3, where the price going up. Here price even went further high. Where did it go? This is today I have marked as resistance, so that Monday, you know, this is a resistance area. It gave a false breakout. Even I did a trade, I made 15,000 today, I have shared it. But here, as said, I'll be very careful in these zones. This entire zone is a selling area, because this is a selling area. See here? So anywhere market can reverse in this zone. How are you going to catch that? You're going to catch that based on price action. The market went down here, but this was a buying point. See where doji, this one came, market went up. So when you see this doji and a decision, then obviously you need to wait further for price action. You got this big red candle, okay, people jump. They think it will go down, but what happens here? It gives a pullback. Then you follow the price action. Okay, you have a triple top. This is a wick to boy engulfing candle, market going down. Okay, remove everything. Market went down here. After going down, you see this is a morning star kind of stuff. Market pulls back. Where does this pulls back? Which area is the decision making area? Morning. This is a pin bar. Prices comes down, goes up. This is yesterday, price came down in yesterday after market hours. Let's assume after 3:30, this is a coming down. And this range is where earlier bulls try to defend the territory. After breakout, always understand a test of that zone is very, very important. If you have entered, feel happy, okay, a test is happening. If a test passes, you will enter long because downside is over. But if a test fails, okay, you get a big green bar, test the previous zone, morning support, yesterday's break. So morning support is broken here. Morning support area is getting tested. Then you get a big Marubozu red candle. This one is a green candle, and I know morning it was very volatile. If you go a little inside the money, for 5 minutes it was varying around 15 to 20 points. But still, what is trading? Every trade is a risk. If you read the price action, okay, decision is made, test, low is broken. After low is broken, buyers are coming to test here if they are seeing whether they can take the price further higher. But this is a kind of gap down, not exactly gap down, but understand if it has formed, it's an inside bar. So you have a Marubozu red candle. So where would you keep your stop loss? Your stop loss would be here. And if you enter your trade here, then you have big money. Now, where would this market stops? How far you want to go? It comes range, kind of flag breakout, comes double bottom, goes up, comes down. And this entire price is within yesterday's price range. Whenever price is within yesterday's price range, we don't know where market will react. There are a lot of footprints of the previous day history. I mean, buyers and sellers history. We have to be careful. Now, this is where the pivots comes into picture. What are we talking about? We're talking about Camarilla pivots, right? Previous day high, previous day low, Camarilla pivots. Now see, now you have a map, a GPRS guide in front of you. Market goes, makes the top, wick to body engulfing candle. Again in 15 minutes, this was again an engulfing candle. 15 minutes, you have such a big candle. But this is what kind of previous day range? This is previous day, day before yesterday's low. Around this area, morning you have a doji. This comes, take support, sharp pin bar, very showing lot of bullish strength. And you get another green candle. Okay, some people may get confused. This looks like a morning star. I mean, the morning star or whatever doji you call, if it is formed at the bottom like this, you have more weightage. This is in between. This is in between. So still this has formed near the morning decision making point. It carries little weightage, but you have to wait for the high to be taken out so that price can go up. Now R3, what did I say? R3 is a selling area. Remember, we are talking about Camarilla. R3 is a selling area. Price breaks R3, but based on our earlier buy and support area, we have selling area from here to here. So you know already in this territory, you have to be watchful. Now around here, you get a big red candle showing first weakness. Okay, again similar to the previous candle, I'm showing you. Where does this weakness takes the price? It breaks R3. Below R3 is the selling area. Then you get a sharp pin bar. The next green candle fails to even test the high. You get a doji, then a small red candle. This is not a doji. It's more of a reversal candle. After a doji, this candle has closed down. So which means sellers are showing they are strong here. But this is a sideways market. Are you going to trade in a sideways market? No, the context is not good. It's still not at good. But you pick up a sign. Okay, you got after doji one red candle came. Again, it is pushed by a big green candle showing bullish strength. After that, prices won't even test this high. This is first high. This is second high. First high, second high of the day. Without even testing, again price go down. Evidence 3. Why am I calling this evidence 3 is because they're not showing enough strength to even test the high. Before high, maybe it's a few points, they're getting exhausted. You get a big red candle. Maybe we could take short here, but where would you keep the stop loss? Your stop loss would be above here because you have 3 evidence. Breaking R3, big candle, you enter. This you may feel it is hitting your stop loss, but your stop loss is here. Or even professional traders who knows pivots, they will keep stop loss high of the day. But let's keep, we are trading in options. This is a range. So I want to keep this as an ideal stop loss. Yes, 3 white soldiers, but this is also goes up. It fails to break this. This is a wick to body engulfing candle. Very high quality evidence. Now, if R3 is a selling zone, where is your next stop? S3, which is a buying zone. So in between, it will act crazy because you have a lot of footprints. These stops here, this is a stop, this area. So market will lag. But if you follow Camarilla Pivot, a selling area, you know, you have a lot of evidence. Once it is sold at R3, it has to come to S3. So if you enter here, you would make 1:2 risk to reward or target S3 and exit. Now here near S3, price tried to break. You got double bottom, went up. These signals we don't know. We cannot pick it. So don't worry about it. Maybe you got 40 points or 50 points here. Nobody can predict it because it's a pullback. S3 is a buying zone, but we know what is the trend from last 3 days. You would exit here. Now below S3, it broke. So below S3, say everyone has missed the trades. So can it go to S4? You should be aware of previous day low. Previous day low is always a pivot. It always acts as a support. The previous day low, exactly, you got a reversal pin bar. Maybe market went sideways, but if you had entered here, you would have got 25 to 30 points because this is a above S3 is a buy zone and this is a reversal pin bar. So quick recap, H3 or R3 Camarilla pivot, sell zone. R4, sell zone. R4 above breakout, it's a bullish breakout. S3 is a buy zone. S4 is a buy zone. Below S4, it's a bearish trend, breakout into short. Now, when you watch the context, price is coming from top above R3. It breaks S3, it breaks S4. Can you think that market has enough energy to take the price another 100, 200 points down? Use common sense. Maybe, maybe not. Nobody can predict the market. But when you use common sense, price has already traveled from a very top to S4. Maybe it may not have enough strength to break L5. Profit booking will happen. So use your common sense while trading. Suppose price opened at S3 or somewhere in between S3, S4, broke S4. You have maximum success on those days. See here what happened yesterday. Above R3, price came down. What is R3? Selling zone. What is your target? Previous day high or S3? Boom. Did it work? It worked. I'm going to remove everything. See here, R3 to S3. S4 is broken. Did it break S5? It has fallen very far away. So market will start booking profit. I can show many more examples. This is where you cannot be blind what I'm telling. Use the context. Open market, this is the high of the day, sharp down in 2 candles. Market reverses, you have to watch out this area. You cannot blindly think it will hit R3. This is a sell zone. We have a sell zone from the previous day. Same area acted as a selling area, went below. Now the distance is much lesser than this one. This is above R3. This is below R3. After breaking S4, yes, you had a trend, big trend. Likewise, S4 to R4 is broken, but this is a selling area. So below selling area, you have one more decision point pullback. Look where market is facing the resistance. So use your common sense, try to play along. This is above R5. The opening itself is above R5. It was a huge gap up. We saw witnessed pretty big gap ups. Now, when you go back and test the historical charts, you may see, yes, Raghu said above R4, above R5 is a breakout. Why this did not break out? But currently, since we are witnessing this market from last few days, and it is 18th October last week, so we had a series of gap ups. See here R5 gave a trend, but series of gap ups. What happened here? Above R4 trend. Market was just moving higher high by giving 150, 100 plus points gap ups. And after that, we saw there was no buying enthusiasm. And even if you are a normal trader, you knew that market did not have enough bullish strength, but gap up was happening. But after gap up, it was getting stuck in a range, maybe because of global events or whatever events. But it was building up for this profit booking based on gap ups, gap ups, gap ups. Maybe option chain was short, so they wanted to slaughter short. I don't care. Somebody is moving the market. I don't care. But when you use your common sense, when price opened above R4, do you see any price action bars for price to take up sideways? No money, no money. So when you see these kind of things, it's better you stay away from the market. This you will understand only by experience. But for now, this is a basic introduction. I know it's a very lengthy video. Unfortunately, if you want to learn, you have to watch the complete video. And I hope this had added a lot of value. If you go through the back testing, you will see the magic of these Camarilla pivots. It's applicable to all the instruments. And I have not yet covered some of the secrets of Camarilla pivots similar to CPR. What are inside bars, outside bars, or ascending pivots and descending pivots? You can identify them using Camarilla pivots. But I'll be stopping it now in the interest of time. We can cover that some other time. Have a great weekend, guys. Thank you.